Well, good day, traders, and there's a lot to get through today. But certainly, if we take a step back, the flows that we saw overnight in the precious metals complex were very, very high, and I think that's an interesting one. The technical breakdown that we've seen in gold against things like the Aussie dollar and certainly against the US dollar have been somewhat significant. Fine, we're closing out on what's obviously been a big quarter, and the fact is the dollar index has broken out to the highest levels since May 2017. But more importantly for me now is that real yields have started moving higher, and that's not good for precious metals. Is that a reflection that things are less bad? I think they probably are, but certainly data has been improving consistently in the US, and that's what makes tonight's ISM manufacturing numbers so important. They come out at midnight Eastern Standard Time. Manufacturing has been one of the weak points in the US and the global economy, along with things like trade volumes and also business spending intentions or capex. If we do see that we see expansion back again in the ISM manufacturing numbers, we know that real yields and nominal bond yields have been very closely correlated to this manufacturing number. We could see gold coming under further pressure. The market is looking for that to come in at 50, so that index right on the expansion contraction divide there. If we do see it coming in expansion above 50, bear in mind we did see a fairly weak Chicago PMI number, then gold could continue to come under pressure as yields sell off or move higher. But certainly, if you look at the prices today coming through the Asian trading region, we saw a weak tape coming through in gold yesterday. Do bear in mind we are coming off a very extended position as well. That you can see gold prices now currently trading down $7, sitting 14.65. I've argued in my daily note today, which I put out there. You can see the link in the description below. The shifting dynamics in the gold market, the various factors that are involved. But we've been looking at exploring whether we can see this coming down into that 12.50, 12.39 buy support range, and that would be interesting to see there. But do watch this ISM manufacturing number. I think it's going to be very key for what's happening in certainly in the US dollar, which, as I say, is trading at the highest level since May 2017, and also what's happening in the yield complex as well, and then subsequently gold. We are pushing up against that upper trend resistance in the dollar index, USDX on MT4, MT5. So that might be a point where we might start seeing a few people looking to sell into. Now, across the news flows, we go more sort of currently today. Well, there's been a number of factors, most notably what's happening in the Reserve Bank of Australia meeting. But we take a step back, and if we have a look at equities as our sort of go-to start with, you can see that there is broad appreciation playing through. The Japanese market up 164 points. We've got the Hang Seng, our cash session, sitting a little bit more positively there. Australia is up on the day, and you can see our opening calls for the FTSE and DAX are looking somewhat constructive at this stage. And it was if the S&P and the Dow was to open right here, right now, you'd be seeing some very modest gains playing through there as well. Oil price is also sitting up 52 cents on the day, so that's giving us a little bit of backbone and quality behind the rally. But let's have a look at Japan. Well, first of all, we did see their Tankan report coming through. That looks at the outlook and also what is happening in the current situation for large and small manufacturers and also the service space. And on the whole, as you can see here from the Bloomberg chart, that generally it was quite positive. I would say that the small manufacturers, or certainly the small outlook, has deteriorated a little bit, -9. That's probably a little bit of a concern. It doesn't necessarily change what's going to happen in Japan. We look to the Bank of Japan meeting on the 31st of October. Put that on your radar, because that is a live meeting. The Bank of Japan could easily cut rates or do something. The market is actually pricing there's about a 57% chance that the Bank of Japan ease rates again, or do they tinker around with their JGB purchases? What part of the curve are they going to play around with? Obviously, if they steepen the curve, they will incentivise buying of bank equity. So that's one thing we're looking at. Dollar yen is really interesting here. We're sitting above 108 quite nicely. You can see we're looking to test the 18th of September high, 108.48. That's going to be a reflection. If that breaks it tonight, it's because we're going to see a good ISM manufacturing number. But those higher real yields that we're seeing really boosting the US dollar. I will say as well that we've just finished the quarter. It was a really strong quarter for the US dollar. It rallied against every major currency in the quarter in Q3. Bar the Taiwanese dollar, but certainly had some really strong moves against some of the emerging market currencies like the Brazilian real, and did well against all G10 really. So certainly we're turning the page on a new quarter. Will we see the dollar index and the dollar continue to fly going forward? We turn on to what's happening in the Australian dollar. Arguably been one of the most traded, if not the most traded currency on the desk today. Not going to surprise. We saw a terrible building approvals number playing through, and I think from that point the market then made up its mind. We had just over an 80% chance that the RBA were going to cut rates today. All four big banks were calling for the rate cut. It's very rare that you see all four big banks predicting that we're going to see a rate cut and the RBA don't come out and do that. Not to mention that we all knew that Philip Lowe, the RBA governor, was going to speak tonight in Melbourne at 7:20. You know, that's usually been a pretty good precursor that they are going to cut rates, and he can use his speech, therefore, just to smooth over everything that's been going through. If you have a look at the statement, though, you can see that they have left the door open. They've said that more monetary policy easing could happen if needed. The market wanted to see that. Yeah, fine, we've seen a situation where they said we're at a gentle turning point. And if you look at the housing market, you can clearly say that's correct. We haven't necessarily seen it flow through into business and consumer confidence to the point where we want, and certainly inflation expectations haven't ramped up. But the market likes the idea that the RBA have the door open for another rate cut if it's needed. We therefore, if we look forward to data, the 17th of October we've got the next employment number, the 30th of October we've got the next Q3 CPI number. Again, if both of those are weak, we could see another rate cut coming through on Melbourne Cup Day. Bear in mind, if we go into the back end of the year, into December, and have a look at the rates market, there's about 10 or so, but 10 to 12 basis points being priced in. So the market's got its eyes open for another rate cut this year. How did the Aussie fare? Well, we went from 67.42, we spiked up to 67.76. So I had a little bit of a gain. I think the market was obviously clearly short. They, for a few hours, just moving around their liquidity. And then I think everyone looked at the statement and said, well, they've opened the door here. They could get more rate cuts if we get a benign employment number, a benign inflation number, and the consumer sentiment numbers do not turn. Housing doesn't give us too much of a benefit there. But certainly, we did see then sellers kicking in, and we're trading near the lows of the session at the moment. We're seeing buying coming through in not just in the rates market, but look at 3-year yields. They spiked up to 75 basis points, currently sitting at 70 basis points. The market has the door open for a rate cut. We just now need this data to play through.